this allows Huijin to do more market-oriented operations as market needs.
Are they really permitted to penetrate into more of the private sector?
Now we're witnessing the next chapter of the reform of China's financial system.
The Chat Lounge. Chat Lounge.
Chat Lounge.
The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
Welcome to the Chat Lounge. I'm Tu Yun, joining our discussion on how the consolidation of state-owned financial firms will influence China's financial sector. Are Andy Mok, Senior Research Fellow at the Center for China and Globalization, Dr. Liu Baocheng, the Director of the Center for International Business Ethics, University of International Business and Economics, Beijing, and Dr. Li Lun, Assistant Professor of Economics, Peking University. Thank you for coming back to the chat, gentlemen. Welcome. China has conducted another major asset reshuffle to overhaul its financial sector. The Ministry of Finance has transferred all of its controlling stakes in a group of financial firms to Central Huijin Investment, which is a sovereign fund under the China Investment Corporation owned by the State Council. So let's first examine the details of the transfer. The financial firms are China Cinda, China Orient, China Great Wall, China Securities Finance, and China Agriculture Re. So, Dr. Li, would you please give us a brief introduction to these five firms? Why did the Finance Ministry have controlling stakes in them?
Absolutely. So within these five firms, I think three of them are different from the other two. The three, basically Cinda, Orient, and Great Wall, are called asset management companies, or AMCs. So if you look at their history, they're all established in 1999, in which period China's is witnessing rapid economic expansion, but is also accompanied by a surge in the so-called non-performing loans, or NPLs, especially with the country's major banks, especially the state-owned banks. So these AMCs were created as state-owned enterprises by the Ministry of Finance back in 1999. Actually, there were four. The other one is Huarong. We may be able to talk about it as well. But these four AMCs was established in 1999, mostly to deal with this NPLs, which is constituting a significant portion of the portfolios of these major state-owned banks. So basically, the government is founded these AMCs to mitigate the financial distress. And the other two companies, the first one is the China Securities Finance, is established much later in 2011 after the Great Recession. So basically, it was created for another reason, mostly to address the volatility in China's security market. As you know, after the global financial crisis of 2008, there's a very large need for market stability, especially more regulation. So China Security Finance, or CSF, was designated to act as a centralized provider of liquidity. So the last one, the Agricultural Reinsurance Corporate Limited, is similar, but it kind of specialized in agricultural reinsurance, which provides basically reinsurance services to insurers, especially in the agricultural fields. So these companies, basically, they all broadly serve China's finance sector, but they have different purposes and goals. And this move can be considered as a very comprehensive measure to kind of stabilize the financial sector.
But some people say the assets were actually transferred from one pocket to another of the central government. Dr. Li, what's the point of the asset reshuffle?
I totally understand, because by the end of the day, the owner of these companies are all basically the Chinese government. But the difference, or the point of the asset reshuffle, is the functionality between Huijin and the Ministry of Finance is different. So previously, the Ministry of Finance have two roles at the same time. One is ownership roles. Basically, it is the stakeholder for these four AMCs, but it's also administrative sector of the government. So it also have the administrative oversight and market regulation roles. And these roles sometimes can have conflict interests. So by doing this asset reshuffle, it basically takes the asset of these AMCs out of the balance sheet from the finance ministry and into the Huijin's basically balance sheet. And this allows Huijin to take, for example, more risks. It can also do more market-oriented operations, as market needs. Everything doesn't have to be approved by the government. Of course, the other side of the coin is that it's now backed by the Chinese government in that sense. So if Huijin fails, hopefully it doesn't, but if it fails, it's no longer a liability that the Ministry of Finance have to bail.
God forbid that. We'll further explore the role of Huijin later on. But Baocheng, what's your evaluation of this move? How many birds do you think the authorities aim to kill with this move?
The consolidation actually is to legitimize the oversight by Huijin because Huijin has the actuality, the management role in these companies or in this security ones anyway, because they have controlling share. And now their intended one is to legitimize its governance, direct control. The other is to separate, hopefully, the market operational performance versus the government intervention. And then it is there to boost more of the efficiency, to make it more of self-governing, although the oversight is still very strong on the top from the State Council to the Ministry of Finance, etc., because after all, it is probably the largest state asset. The disadvantage lies in that it may be too big, and the consolidation in the internal culture can take quite some time. And then if you really mention about monopoly issue, that's going to be further monopolizing the market and dominate it. And the other is that whether its function to continue to feed in a matter of privilege to the state-owned companies, or are they really permitted to penetrate into more of the private sector? That's also another question to be raised. So it strengthens the competitive edge by a bigger capital with, over 60,000 employees, and now with capitalization of around 5 trillion, I should say. So it is a humongous one. So therefore, it prompts actually even stronger oversight from the central authorities as how it goes, because it's going to create more of the shockwave, either negatively or positively, to the marketplace.
Seems a lot of concerns there, but we'll dive deeper into that later on. To Andy, can you tell us your interpretation of the timing of this move? What prompted the ministry to transfer its stakes in those financial institutions to Central Huijin now?
Sure. Well, to add a little bit of context before I answer your question,
Right.
I think it's easy to overlook just how radical and transformational a change China's financial sector has undergone since reform and opening in 1978. So Professor Liu was very accurate to say that some of these companies that have been transferred to Central Huijin were these asset management companies. And when we look back to that period in time, China's banks, especially the big four banks, so ICBC, Bank of China, Construction Bank, Agricultural Bank, were banks in name only because of the command economy. So while they were called banks, they did not make loans using underwriting guidelines, risk assessment, etc. They were basically cashier's offices, right? So the government would say, here, make this payment, we'll call it a loan to this entity. So they ended up with all of these non-performing loans, and for them to go public, to transition to being true banks where they were evaluating risk, lending money based on sound commercial principles, these loans had to be moved off their balance sheet so these big four banks could also IPO and otherwise get equity injections to become not only the successful organizations they are to be, but some of the largest financial institutions in the world. So this is all context to say that these AMCs have really succeeded phenomenally in playing a role. So why now? So one of the important things I think to recognize about Central Huijin that has been alluded to earlier is that it is a subsidiary of the China Investment Corporation, CIC, which is one of China's sovereign wealth fund. And because of this, but however, Huijin is focused purely on domestic activities, whereas CIC invests all around the world. The other difference is that Huijing has a policy focus. So their goal is not to maximize financial return, but to support the policy objectives of the PRC. So they do this through holding equity stakes in the big four banks, again, ICBC, CCB, Bank of China, also Bank of Communications as well. So because of this, they have, I think, a concentration of expertise, especially in the domestic financial sector. So that's the why, right? So why is it being put under Central Huijin? I think why now? I think there's two reasons. One is that it is part of the ongoing structural reform of China's financial system. So again, while tremendous, remarkable progress has been made over the past few decades, more needs to be done. And I think this is an important milestone. There's also, I think, situational factors. Of course, there's the challenge of the real estate problems that China is facing that still need to be resolved, that are also affecting China's banks and other financial institutions. But also, I think it's well recognized that bolstering confidence in China's financial system is very important. So increasing confidence amongst both domestic investors and foreign investors is very important. And I think, as we'll probably touch on, the market reaction to this move has shown that this is having a positive effect on investor sentiment. So I would say, just to briefly wrap up, first of all, that China's transition to a more market-driven economy, especially with the big four banks having to unload their quote-unquote non-performing loans, has really demonstrated the success of these asset management companies, who then have transitioned and added to their activities. But now we're witnessing the next chapter of the reform of China's financial system, as well as a reaction to situational factors that the economy and I think China's financial markets are facing today.
The Chat Lounge. The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
That's quite a detailed explanation of the reasons. But like Dr. Lee earlier mentioned, those asset management companies were supposed to get out of the control of the finance ministry back in 2009, but obviously it was postponed until now. So, Dr. Lee, you said it's for the sake of stabilization or stabilizing the market, but is it now the market is stabilized enough for this transition or transfer?
So I think 2009 is absolutely a very special period because it's right after the financial crisis globally. So it's definitely not a good time to do the consolidation. Why now is the ideal time? Honestly, I don't have a good answer for that, but I can definitely speak to, for example, some of the Central Huijin's role after the reshuffle and why those roles may, serve as very beneficiary to the time now. So overall, I would like to summarize Central Huijin's role using two metaphors. The first is, I think it's somehow like like a bomb disposal unit that you can find in, armed police in the military. So basically, it's a stabilizing force within China's financial system. And whenever you spot, for example, a potential systematic risk or financial distress, then, Central Huijin can be the one to kind of address these potential threats before they escalate into bigger disaster. So basically, it has more flexibility than the Ministry of Finance. Another metaphor is that some of these non-performing loans can actually be seen as pretty good assets. If you are familiar with the term ABS or asset-backed securities, in the U.S. or other markets, they're packaged into securities that can be sold to individual investors. So Huijin, in this sense, can act as a market-oriented intermediary. So it's sort of like, I read a quote from an online forum that says Huijin is basically trying to extinguish market fire with market water. So I think it's well said because, it can kind of package or, relabel these NPLs into valuable investments at appropriate prices and also, use all of these subsidiaries, such as the other state-owned firms, to work through a strategic asset allocation and management and turn these non-performing loans, turn these challenges into opportunities. So I think both roles are highly demanded now, especially when we're looking at increasing financial stability globally and also slowing consumption. So I think this time is kind of the ideal time for the finance ministry to do this consolidation effort.
And then all in all, Huijin is now like the boss of those financial firms. Then actually, Baocheng already tapped into the challenges it may face, and you all mentioned Huijin's role. Then let me ask each one of you, what would you say is the biggest challenge Central Huijin will have to face in integrating these diverse financial entities under its management? Baocheng said it's too big or too clumsy, maybe, to handle. And also, it's a cultural integration. Baocheng, what's your pick then?
Well, further details needs to be ironed out as how they divide the supervising role from the State Council versus the Asset Management Commission versus the Ministry of Finance. And because their managers are really arranged on a political or executive front instead of selected from the market, that's one question that needs. So to what extent is he responsible for multi-stakeholders? So there needs further clarification. Second, how the oversight can continually be exercised so that the prevention of the corruption can be carried out, because there has been a number of bad cases over that. And then how to address the bad debt, because initially Ministry of Finance would like to have more time to manage the bad debt issues. And now with the changing dynamics, with the eagerness of the central government to give a better landscape of Chinese economic performance and also the financial marketplace, so hence this is really introduced despite of some of the constraints. The other is that how they can really spread out over the market, because if you compare with some other sovereign funds, they are really gaining more of the return from the global marketplace, spreading into different level of basket. But now, at least so far, the Chinese asset management companies, they make profit out of the Chinese companies, particularly the state-owned companies or state-owned banks. So these are really the issues that they need to consider in making them really globally competitive and also globally accountable, so that they can also be more attractive to global investors into the fund. So beware that all their capitalization is drawn from the bond issued by the Chinese Central Bank. So they are operating basically on the debt anyway. So therefore, further responsibility, accountability, transparency will be required.
But doesn't it have any advantages, right? You said it's a bit too big, but I guess another sovereign wealth fund, like a Norwegian sovereign wealth fund, it got like somewhere about 1.8 billion US dollar assets. But after the consolidation, wouldn't Central Huijin become more, powerful when it comes to, it got more firepower in stock, right?
Yes, of course. Scale itself is an advantage because you can really beat up other competitors, particularly in big projects and also in long-term strategic investment. So that is absolutely true. But the challenge is still there. When the operation is too big, bureaucracy definitely will get nurtured, and the different level of understanding in the central mandate can also take place. So, and decision-making can be slow. So these are really the issues that of all big companies, not only the Chinese one. So all big operations will have to face.
That's true. And to Andy, what's your take there?
Well, I think to add to what's been discussed, any kind of reorganization, acquisition presents challenges, right? So just you have your generic integration risk. But I would say here that with Central Huijin, that they're a little bit different from a sovereign wealth fund. So first of all, of course, they're focused, I believe, exclusively or at least primarily on domestic entities within China. And second, they are actually fairly active. So they are significant shareholders, as I mentioned, in the big four banks, but they actually exert fairly direct influence, again, being the government's representative to ensure that the entities in which it is an investor align with national policy objectives is very, very different. So your typical sovereign wealth fund, even a CIC, is primarily a financial investor looking for financial risk-adjusted returns. Whereas, I think of Central Huijin as a little bit more involved, activist perhaps is the word that we can use. And certainly because of its focus on the financial sector in China, I think size, of course, can make things more bureaucratic, slow things down. But at the same time, they also have a very broad and deep view because of their shareholdings in these different financial institutions that may give them a very powerful knowledge advantage in managing, these new entities more effectively. So to offer a little bit more of a positive take on this.
Right. And Dr. Lee, do you have any idea how many assets will Central Huijin have after this consolidation then?
Well, I've read many statistics. I think it's somewhere around 6 trillion to like 10 trillion. So that's the number.
Dollars or yuan?
RMB.
All right. That's around 1 trillion US dollars.
So, but I mean, I can definitely resonate to both Andy and Professor Liu's argument about too big to fail. I think I would like to add to it is, I think we have to avoid the so-called moral hazard problem, basically meaning that when the asset managers within Central Huijin or within any of its subsidiaries feel like that Central Huijin is this humongous entity that can't fail at all, this could encourage their excessive risk-taking behavior, which might actually lead to really unstable outcomes. So whether it's too big to fail, I think basically we have to have more regulatory power within Central Huijin, especially across its different subsidiaries, to make sure that these excessive risk-taking does not happen. And another potential challenge that I can think of is on the real estate market, especially on the second and third tier cities. So as we are observing some of the cities, there are foreclosed properties that need to be handled. So Central Huijin, especially after it has consolidated these huge AMCs, will have huge stock of these foreclosed and mortgage properties. So what it does to these foreclosed properties, to these mortgage-backed assets, will have a huge effect on the local supply in the housing market in the second and third tier cities. So this could cause many unintended consequences for property values, for local economies, and it could even bring broader financial repercussions. So this is definitely something that I would advise Central Huijin to care about.
To all the issues I really want to raise, if they are not challenges, one is that because the 4 subsidiaries that is being put together under the arm of Huijin, they have different functionalities. They also have different profit rate. The performance is pretty much polarized. Like all they are not really up to speed, as a matter of fact. So how to consolidate the business, exercising expertise to leverage the different performance. So that's quite a bigger responsibility. The other is that President Xi has been holding talks with Chinese private companies leaders. He emphasized on level playing fields between the state-owned ones versus the private companies, including banks or whatsoever. So now how the Central Huijin after consolidation is going to serve to such strategic purpose, and by having equal access of financing by those private companies. That's also another question that they need to take into consideration.
Right. So you're saying that actually Central Huijin doesn't have any good firewalls, if you will, to fend off those potential problems there.
No, I mean, it's pretty much I should say a capacity issue. When you are getting too big, and how do you really coordinate? That requires higher level of expertise and skills, and also the streamlining all the bureaucracies, because all combination mergers take a very long time to address different culture, different expectations of the previous different organizations together. And the other is that because Huijin, they are created to address strategic issues serving as government arm to deal with the financial marketplace, and they primarily service and support the state-owned banks. And then how those private banks, because you see along the street, there are so many private banks are being treated. Are they going to have equal access to the support of the Central Huijin? That's also another question, because the central government has been calling on time and again to have the equal access by private sectors to all type of treatment from the policymakers, including those policy banks.
This has been the Chat Lounge. When we come back, we'll check out how the reshuffle may help to overhaul China's financial sector. Stay with us.
The strong wind was howling and whistling.
He was the first Chinese citizen to graduate from Yale University in the mid-19th century.
I was born on the 17th of November. She had prominent features. 3 of us were old enough to lend a helping hand.
He navigated between 2 vastly different cultures and moved further to realize his dream and promote understanding between the people of China and the United States.
Ye Mingxing was a native of Hanyang. I realized no danger. China is really awakening.
Come and join us in discovering the incredible journey of Yong Wang in his autobiography, My Life in China and America. Check out the Audible stories on radio.cgtn.com and all major podcast platforms. Just search for the podcast Books and Beyond and find My Life in China and America.
Welcome back to the Chat Lounge. We continue our discussion on the latest consolidation of China's state-owned financial firms. Then, Andy, do you see any trend of those issues or problems being refined as of now?
So if I understand what Baocheng was saying, is that so in the commercial lending market in China, we of course have the big 4 banks that are dominant and they're state-owned, and Beijing has controlling shares in these 4 banks. And does this mean that the private banks will be disadvantaged? Is that the question?
That's right, because, for example, the non-performing loans by the state-owned banks can be taken care of by Huijin or its subsidiaries, but this is not really the equal treatment to the private banks so far.
Right. No, right. I think that's a great point, Baocheng. So basically, there is not a level playing field for the private banks. Like, I guess that would be like Mingsheng and Bank of Communications, right? That they can't compete effectively against the big 4 because of the advantages these big 4 banks have because of the Huijin backing.
That's right, because they are given multi-physical on a macro level. They are there to shore up the Chinese economic performance, financial stability, etc. But their immediate objective is still to service the state-owned banks. Now, how about those private banks, which are supposed to have equal access to such sort of policy or policy changes? That's my question.
Yeah, it's a great point, right? But I guess it depends who matters more, right? Because if we think about the enterprises that are the customers of banks, right? Whether that's a private bank or a state-owned bank, as long as they have inexpensive, relatively friction-free access to credit, do we care that the private banking sector of China is not doing that well?
That's quite a question, because what I gave as an example is that non-performing loans by state-owned banks can be taken care of by Huijin or its subsidiaries, but non-performing loans by the other commercial private banks, particularly those based on private capital, can they also receive such sort of treatment?
So I guess my own view, too, to answer your question, is that, and maybe because I'm not, I shouldn't say concerned, but it seems to me the bigger problem is that small businesses, big businesses, consumers have access to inexpensive credit, right? And as long as that happens, like Deng Xiaoping said, like black cat, white cat, as long as it catches mice, it's a good cat. Do we really care that the private banks are disadvantaged? I'm not sure. So it seems to me that if you're a private bank owner or shareholder, you would care a lot, right? But if I think about the macro economy, do we really care that much? As long as credit is available on reasonable terms, right? Which is what commercial banks do, right? They provide credit. So I can even see an argument that having the big 4 dominate is a good thing. As long as they're not monopolies and, exploiting their customers, it's a good thing.
Indeed, actually, the market has responded quite positively. Though I know there are a lot of concerns there, especially those mentioned by Baocheng. But the general sentiment seems quite positive, right? At this moment, we've already seen stock market. The major indexes actually increased after this news, right? So maybe those problems, they are very challenging, but it'll take some time for them to solve the problem. Obviously, like Baocheng said, a lot of things are waiting to be clarified. But now, back to the prospect of this Central Huijin, maybe to Dr. Li, how would you assess its value in stabilizing the financial market, which is obviously a quite vital goal, target, of the central government at this moment?
Yeah, before doing that, I'd like to briefly comment a little bit or add some of my insight on the basically private versus government lending problem. So I think given this, the current macroeconomic landscape, the problem right now at this very moment, it's not an oversupply of credit, but it's rather an under demand of credit. So basically, we're seeing that loans are not growing as wanted, and the profitability of banks are kind of having this instability. So whether the loans are given out in the form of government-backed banks or shadow banks or private banks, I think right now the central goal for the government is to encourage lending, to encourage spending, and to kind of revitalize the market. So in that sense, I think having this consolidation effort basically take care of the accounts or the non-performing loans or the problematic side of the balance sheet. So in that sense, in the short term, actually, I think it gives the market a boost because the announcement of such reforms, it kind of creates investors in confidence. And also, it's in all sense, it's a step to a more modernized financial sector. So in that sense, I think that's the reason that kind of explains the stock market increase. But overall, I think it is crucial that we're not giving out too much loans in the long run, and we're not giving risky loans to those who cannot afford to repay them. So in that sense, economic fundamentals or R&D expenditure or the increase in total factor productivity, that is what explains the long-term growth of stock market and our GDP. And I think as long as we're providing sufficient funds to fast-growing companies, we should be in good shape.
So you're saying, suggesting those small and medium-sized firms still may not be able to get, the loans they need?
No, what I'm saying is that I think right now the borrowing cost in China is fairly low, and I think the borrowing constraint for small and medium-sized firms is not the major problem that is faced by them, or that is the major problem that this consolidation effort is trying to solve. I think the main reason for this consolidation is first to take all of these potentially risky assets or non-performing assets out of the Department of Finance balance sheet and put it back into the market. And second is also to have this unified oversight to create this stabilizing force that kind of can solve the problem once they arises. So I don't think that basically this consolidation effort is trying one way or another to solve, like, for example, the borrowing constraint problem that's being faced by small enterprises.
Now, I think now the positive response from the stock market indicates the meeting of expectation of long waiting line in the confidence of those investors.
Okay.
But now this optimism, how long is going to last? That also remains to be seen. How these reforms can really produce tangible improvements in the performance of those affected institutions, and also the more of the sustained transparency and effective communication from the centralized Central Huijin can also be delivered to those entities involved in maintaining the sustained trust of those investors. So these are really the expectations we would like to see that Central Huijin can really deliver.
Right. And Andy, you were saying?
Yeah, sorry, if I can just jump in. I wanted to respond to what Professor Li was saying or ask a couple of questions. So one is that while the official cost of credit, the interest rate is very low, how accessible is credit to small and medium-sized businesses, right? Because my understanding is there's a lot of other what I would call friction or, just whatever. It's not necessarily easy, even though the official interest rate is low, for businesses to get credit. But I take your point that it's a problem of demand for credit, generally, not so much supply. And here, the observation I'd like to offer is that the market, right, whether we're talking domestic investors, businesses, or foreign businesses and investors, is that they, one, want to see the government doing something about this problem, right, first of all. And then second, doing things that make sense. So if we look at this, first with the meeting that President Xi had, this is the rehabilitation of Ma Yun, right? Which is a huge positive signal to the market that it's safe to make investments, to start businesses, to increase business activity because nothing bad is going to happen to you, right? And then the second signal is that, okay, we're going to do this restructuring and put these entities under Central Huijin because this is the entity that has the accumulated expertise. It has the responsibility for representing the government's interest in the financial sector. So to me, it passes the smell test, right? So first of all, the government is showing, okay, we recognize something needs to be done and they're doing something. And what they're doing makes sense. So Professor Lee, I don't know what your thoughts are about that, especially about the real access to credit for businesses in China.
Yeah, so I think those are very good questions that I can only provide my personal insight. So we all know that state-owned enterprises basically have no problem at all accessing. So I understand that your question is mostly about private companies. So I think it's a long-standing myth that the problem about borrowing is that they can't get access to cheap credits because there are lots of fintechs or shadow banks that can provide even many times non-collateral required loans. If we're talking about small amounts, for example, a couple 100,000 yuan, those are easily accessible. If we're talking about larger, for example, in a couple of $1 million, those are more difficult, but it's all a matter of price, right?
Right.
What interest rates
very high is my understanding.
So the ongoing rate right now is at, I think, historic low level because I think the main reason is that there is a lack of demand for this credit. Basically, we're seeing a large amount of savings and deposits sitting in these banks, and they're having trouble to give loans to these small enterprises. So even though we're not saying that they can borrow at 2% or 3% or at a reasonably low level, I'm saying that if we're looking at the entire history after 1970s, I think right now is the borrowing costs for small firms are much lower than historical levels. The only problem is that many of the private enterprises, because their market shares are being taken up by state-owned enterprises, they lack the inner motive to expand and invest and to borrow. And this lack of demand for credit, I think it's more problematic than, they want to borrow money, but they can't.
The Chat Lounge. The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
I'm sure that expand financing access to private firms is, I should say, major target of those moves. The good news is that we've already embarked on this path, and maybe more importantly, this move by the finance ministry this time is more targeted at this market-oriented governance structure, right? Which is the key to addressing the doubts very often raised by international rating agencies and to streamline the structure or the functionality of China's financial market. It's the first step. Then let's get back to this reaction to the move. We've already seen, we've just mentioned that the market, especially the stock market, has responded quite positively, I should say. Then how do you think this would affect investors' sentiment in overseas market or foreign investors and their perceptions of China's commitment to a financial sector reform? Baocheng?
Yes, I think this reshuffle signals China's central government commitment to further reforming the financial sector, which has been long-awaited by both domestic and foreign investors. And it is also hoped that they're going to improve the corporate governance. And this will definitely positively influence the foreign investors' the perception over what is going on in China. And plus, that the central government has been sending out more signals to further open the Chinese market, which used to be restricted, for, particularly in the financial sector, telecom, healthcare, etc. Because those investors do not only invest in Central Huijin or the Chinese stock market, they really wanted to participate in the Chinese economic growth. And now, at the moment, my understanding that the most of those large investors, they feel that they got their finger burned, not for the blame of the Chinese government, but due to the COVID period. And now they are still holding the money and see that whether this commitment is going to be further enhanced by more of the implementation. And now with the consolidation of Central Huijin, they really still wanted to see what is really the prospect. Are they going to really operate on a market-oriented basis? And also the separation of the regulatory power versus the operational capacity is going to be further delivered. So these are really the issues. So therefore, it is not the single operation of the consolidation of this sovereign finance, but rather it has to do with the macroeconomic policy and also how other Chinese stakeholders would really respond to it. And the last I could think of is that, are they going to provide, again, the same level of playing fields to many other sectors, particularly to support those small and medium-sized companies and support those hidden champions that is going to prosper? As we have previously talked about, the private sectors can borrow money easily if they have tangible assets that's going to be valuated and that's going to be mortgaged. Otherwise, it's going to be very difficult. So that requires more of the Chinese financial managers really to enhance their own capability in further scrutinizing the prospect of some small and medium-sized businesses as how they grow. So that's part of risk management, but they cannot really, in the oversight, such a explosive growth of those small companies who can really shoot very high and even turn out to be unicorns in a short period of time.
Right. And like Baocheng earlier mentioned, there was this upbeat sentiment on the stock market, but the question is how long it can sustain. Andy, what's your expectation?
Well, I think certainly, Tuyun, that the hope is that this is a sustainable increase, right? So on a fundamentals basis, Chinese equity markets are still cheap on a PE basis. I think we're in a transition from fear to greed, right? So there was a lot of pessimism for various reasons towards Chinese equity markets for a number of years. I think that there's certainly reason for optimism, and we see foreign investors like David Tepper from Appaloosa, right, as being one of the most vocal and visible foreign investors who have said, now is the time to be all in on China. So, I think sentiment matters a lot. I've always been very optimistic about the fundamentals of the Chinese economy. There clearly are short-term challenges that need to be addressed, including the transition to a new productivity-driven growth model that is largely tech-based. And I personally believe that, we are witnessing this with DeepSeek, other advances that are being made, that the long-term fundamental outlook is very positive. From an equities markets perspective, it's really just a question of sentiment. And I think that the Chinese government, again, with this recent meeting with top private entrepreneurs, the moves we're talking about today with Central Huijin, now is also, making it a priority to improve sentiment domestically and overseas.
Right. And one more question I overlooked is the ability of those asset management firms of handling bad asset or non-performing assets after this consolidation. Dr. Lee, what's your evaluation? Actually, a lot of people say, in the past, they're engaged in making quick money by doing some side businesses. But after the consolidation, they are required to focus on some core business like handling non-performing assets. So do you think their ability would be hampered or kept up after this consolidation? Would that be a big concern?
Well, it definitely have to be observed in the future. But I mean, in the sense that Central Huijin is now kind of consolidated all the competitors in the market, especially for these AMCs. I think right now my concern within these domestic AMCs is not that they're not taking enough risk, but is instead they're taking too much risk. If what you're saying is precise, is that when they're kind of contracting to a more core business or more central roles after they are being merged into Huijin, I think overall that's going to be a good thing. So I mean, in terms of the future, what other stuff that Central Huijin can do after this consolidation, I think if it can contribute a more positive role in either addressing our real estate market or addressing the local government debt management, those are going to be hugely beneficial to China's economic outlook. Of course, there are many ways that you can do it. For example, the more aggressive way to address local government debt is to kind of have some debt to security swaps, basically convert local government debts into securities. But there could also be, other ways to kind of address the property market challenges. So I think we now have, instead of having many small competing players in the field, we now have one really powerful player. So I think that the real question is not about its efficiency, but rather whether it's taking too much risk at too fast a pace, and whether it's really kind of solving the core problems that affects the long-term economic outlook for China.
Then what do you expect Central Huijin would do after this consolidation? Because a lot of investors, especially domestic investors, expected to come up with more eye-catching moves on the financial market. What do you expect it may usher in?
Well, I don't want to make any predictions that later turn out to be false, but I think overall it's a net provider of liquidity to market, so it has all of these ammos. Well, I mean, it could, for example, increase its holdings in specific sectors, for example, hold more ETFs, or it could, I don't know, it could tap into, as I said, real estate markets, provide liquidity to real estate developers, or it could address something to, for example, the local government borrowing vehicles, these Chengshanghang or local banks. I think there are many things that it could do to kind of provide more market liberalization and also more transparent practices. So overall, I think it's by doing the consolidation, Central Huijin is becoming more and more a important financial infrastructure in some sense, that it's a net liquidity provider for basically all across the financial sector.
Right. And Andy, what's your expectation? Maybe something more closely related to the daily life of ordinary people like me who, doesn't have any investment in the stock market.
Well, I think it certainly can, Tuyun, but it will be most likely indirect versus direct. The same way that a central bank sets interest rates that may not directly affect the lives of consumers, but does have a very profound impact, right? Because the price of money affects everything. But I would say here that, Central Huijin directly, they're an investor, first of all, right? So they're not, as far as I know, not likely to be very directly involved in many of these activities of the companies of which they are significant shareholders in. But what we hopefully, and I believe the intention, is that we will see improvements in these companies, right, that are now under the Central Huijin umbrella. And whether that's elimination of redundancy, as Professor Lee talked about, right, the sort of consolidation, streamlining, so making faster, more effective management decisions. Huijing as an important shareholder would certainly bring perspective, expertise, as well as information about important policy initiatives, right? So I think that, again, to paint the positive case here, this could be very good for the operating companies individually and as a set, right? As an ecosystem, if you want to think about it like that, that with one well-informed, powerful, knowledgeable, significant shareholder, that can improve individual performance of companies as well as the portfolio of all of the companies as well.
Then, Baocheng, very briefly, what's your expectation there?
Well, we would expect that they have the right transparent institutional structure where shareholder responsibilities are further being clarified. And we hope that they're going to have more of the independent board to oversight instead of simply listening to some government officials in the decision-making process. And then they also are expected to enhance their risk management skills in terms of the building the stress test models and also the risk assessment mechanism so that more of the sophisticated investment can be handled, particularly to support those firms that has a big potential but badly need the money without much of the tangible asset to support. So much of the expectation lies from the Chinese people where for example, if you hold any share in the stock market, you would expect that, those companies can really benefit from this consolidation so that they're going to deliver more of the expected income to those even smaller investors.
Right, like you all mentioned or suggested, overhaul of China's financial system is actually a comprehensive project. And then last but not least, let's zoom out a little bit to the overall picture. Apart from the asset reshuffle this time, what else urgently needs to be done to enhance, governance efficiency and market competitiveness of China's financial sector, which is, I think, the most urgent task of the authorities right now. Shall we begin with Baocheng?
Yeah, I think much of the support is really consumed by the state-owned companies. They also have a dominant role not only in the Chinese economy but also on the stock marketplace. So therefore, the institutional restructuring of the Central Huijin, if they are able to synchronize with the deepening of the reform over the Chinese state-owned enterprises, that will be a more decisive, positive solution to that regard. And then the other is that whether they are going to deal with the bad assets or non-performing loans in a market-driven way instead of simply crying to the central policymakers, that would be highly appreciated.
Right. And Andy, please?
Well, I think, what China is doing here is really forging its own path to modernization. And this includes the financial sector as well. So, I think there's a lot of unknowns, but certainly, again, if we look at the historical track record, you can't argue with that. So I would say stay tuned.
Yes, of course. And last but not least, Dr. Lee, please.
Yeah, so I definitely agree that I think having more private sector participation, having lower barriers to entry for private and foreign banks could be a net positive to first foster competition and also foster innovation within and across different sectors in the economy. And finally, I think overall, the most beneficial purpose of the finance sector is to provide credit to those fastest growing sectors, to provide liquidity to those that need it the most. So I think overall, having more efficiency, having more investment in technology and talent, those are the things that China's financial sector can aim to target and reform.
And on that note, we wrap up this session of the Chat Lounge. Many thanks to Dr. Leland, Assistant Professor of Economics, Peking University, Andy Mott, Senior Research Fellow at the Center for China and Globalization, and Dr. Liu Baocheng, the Director of the Center for International Business Ethics, University of International Business and Economics, Beijing, for sharing your time and very enlightening insights. The show is available on all major podcast platforms. Please email us your comments at radio@cggn.com. I'm Tuyen, and thank you for listening. Join us for more Chat at the Chat Lounge next week.
I cannot marry you while your mother regards me.
Step into the world of timeless elegance with Mrs. Spring Fragrance, a captivating audiobook by Edith Eaton, read by Man Ling.
Because the green leaf still clings to the bough.
Experience the lively yet complex lives in Chinese American communities at the turn of the 20th century as Edith Eaton's delicate prose weaves together themes of tradition, change, love, and identity.
Forget all that belongs to the joy of life.
Follow the journey of Mrs. Spring Fragrance and witness the struggles and fights of those living on a rapidly changing exotic land while holding on to their cultural traditions, or more importantly, to their identities.
He could hardly believe that his daughter was seriously opposed to becoming the wife of such a good-looking, prosperous young merchant as Wang Ling.
Join Books and Beyond for Mrs. Spring Fragrance. Let the stories come to life in your imagination. Subscribe to Books and Beyond for free on your favorite podcast platforms, or log on to radio.cgtn.com for more.